Hello, my name is India, and I serve the Great Lakes Zone of the Christian Church Foundation. And today I'd like to share some information with you about provisions that were made through the CARES Act. The CARES Act stands for Coronavirus Aid, Relief, and Economic Security Act and was signed into law on March 27th. Among many other provisions, the Act provides incentives for people to continue giving to churches and nonprofits so that they can continue to serve the community. Since the 2017 Tax Act significantly increased the taxpayer standard deduction, most taxpayers no longer itemize. The standard deduction is the benchmark for whether it makes sense to itemize things like property tax and charitable gifts. As a result of that increased benchmark, there are less perceived tax benefits related to charitable giving. In order to promote charitable giving in 2020, the CARES Act creates an above-the-line deduction for cash contributions to nonprofits of up to $300 for taxpayers who take the standard deduction. It's unclear whether this amount will be doubled for taxpayers filing jointly, but the early information we've seen suggests that it will. Another provision of the CARES Act allows itemizing taxpayers to make tax-deductible charitable contributions of cash of up to 100% of their 2020 adjusted gross income. Previously, the tax-deductible contribution limit was 60%. And individuals who are charitably inclined and over age 70 and a half may have another option. Although the CARES Act suspends required minimum distributions from tax-deferred retirement accounts for the 2020 tax year, qualified charitable distributions, or QCDs, are still possible for individuals who are over age 70 and a half and who have assets in a traditional IRA. Making a qualified charitable distribution means requesting that a distribution from your IRA be paid directly to a qualified charity, which reduces future tax liability on the withdrawal of those assets. As you may know, while the SECURE Act, signed into law in December 2019, pushed the RMD age back to 72 for many seniors, it did not change the eligibility age for making QCDs. That age is still 70 and a half. And if you're over age 70 and a half, charitable, and have a tax-deferred retirement account, I'd suggest you talk to your tax advisor about whether there are ways you might use a qualified charitable distribution to benefit you and your favorite charity. And many of you have been wonderful stewards over the years and have accumulated sizable resources in your IRAs. And although it's a blessing to have resources, when you have to take required minimum distributions, those distributions from your IRA are taxable income. That additional income can move you into a higher tax bracket, reduce your eligibility for certain tax credits and deductions, and you might even have to pay a Medicare surcharge if your taxable income is too high. If you're charitably inclined, the 2020 pause in RMDs would be a great time to work with your foundation representative and your tax advisor to develop a strategy that helps you to use these assets to accomplish the goals that are important to you. And as the panorama continues to change, we will keep you updated on new laws and provisions that may have implications on your financial situation. And for more information, you may check our website at www.christianchurchfoundation.org, or you can contact us by phone at 1-800-668-8016. And we look forward to hearing from you, and we just pray that God continues to bless you and your families.